Now, if you look at advanced market structure, it's always the structure they will teach you is always the sweep of this high, the break of this low, the inducement or the structural liquidity, and then the entry, right? These are all advanced market structure, and then this is your structural liquidity, and then you now enter from this zone or this zone, anyone, the one that is closest to liquidity, right? Now the key level that is closest to this liquidity is the one you're going to be using for entry. Yes, this is how it always looks like. But now there's something I think I know that it's not that I'm proud. Actually, I should be proud that I am should I say I'm the first person I found out myself. Literally a lot of things I found out myself. I just love doing them. When I go through the market and I lose couple of trades, 2, 3, 4, 5, I see something new, I just become so excited and I keep doing it. This is literally what advanced structure looks like. And then what we have here is a sweep of liquidity. What we have here is a break of structure. What we have here is structural liquidity, and what we have here is our POI or our key level we enter from. Now, this sweep of liquidity and this break of structure and this structural liquidity. Now, in this structure, in this particular structure you're seeing, this A, right? These are protected high, which we call A, and this B and this C. Now, there's a type of structure that I want to talk about today. I'm not here to talk about this exact type of structure. Now, I'm on a swing trade, which I would still show you guys. I don't know whether I'm even going to hit CP or the market is going to reverse. Now, look at this swing trade. If you pay attention to this move generally, you see that okay, this particular move is a sweep, a break, and structural liquidity, and then right the entry on the NZD card. Right now, why do you think this is the structure we all trade, and why do people think that okay, my own structure is different? My structure is not different from your structure. Our structure is all the same. The difference between the structure, our structure, is how I see my own, and I'll explain that for you guys today. Now, when you come to the line charts, I will explain something significant, something that might help. Now, in advanced market structure, there is a type of candlestick I always use for my entries, which I love the most, which I call engulfing candlestick, right? Engulfing. And I shared some setups with that engulfing, right? Engulfing. How am I writing? Engulfing. Now, this engulfing pattern is a type of POI that gives us high probability setups. I'm going to show you a lot of them today. Now, when you guys know key levels, right? When you have a key level, let's say there's a support. Okay, on the line chart, a support zone is going to look like a V shape, right? So, okay, let's look for one here. For example, let's just give an example now. For example, if you look at this V shape, this black candle and this white candle, the lower part of this black candle and this white candle is a support zone, and then on Euro USD, the market tapped on this support zone and it's pushing up. I'm correct? Yes, I know I'm correct. So after the tap of the support zone and the market is pushing up like this now, this zone is the support zone. If you go to the line chart, this is going to be V-shaped, right? You can see the letter V-shape. Now, and this one that is A-shape, the tip of this zone is now a resistance zone because it's going to look like what? An A-shape. So anytime the candlestick closed above this zone, the body of a candlestick closed above this zone is considered a break of structure. And you can see automatically my break of structure and your break of structure have differences, right? For me to say I have a break of structure, I need the market to break below this now zone. I don't need the market to break below this low or this low. I'll now carry one long candle and I'll do like this, and that's a break of structure. No, within this zone, just look at this. Within this place, a break of structure has occurred. This small place, a break of structure has occurred. Why? Because this black candle and this white candle, they are in form of support, and this black candle closed below the support zone. So this place, I have what? A break of structure. Go to the line chart and you see it clearly. Here, there is a break of structure. So a market structure shift, anyone you want to call it. So for the way I trade, it's actually very significant and it's very interesting, and I love the way I do it. A break of structure doesn't really mean, it doesn't mean the market needs to break below this low. If I have a break of structure right here, do you know I'm going to start selling from here and I will drop down? I don't need to wait for the market to break structure and start giving me all that nonsense for me to now say, okay, Wally, I need to sell. That's not how it does. That's not how it works. Now, this week, I don't think I literally won any trade. I'm currently in a I just closed 2 positions at night because I feel like that's the only way I'm going to win a trade this week. This week I took 2 losses. One blue I never see. It's just yesterday night I recovered the losses with 1% more profit, and the other one I'm holding and it's retracing. It's like 1% profit now. So if you see how my structure works, I want to talk about the engulfing candle. Now, if you know what an engulfing candlestick is from when we were learning how to trade, an engulfing candlestick is it's a bearish candlestick that engulf a previous bullish candlestick, or a bullish candlestick that engulf a previous bearish candlestick, right? What I mean is you can have a buy candle like this, a buy candle, and then you now have a sell candle like this that engulf it, right? Now, if you have a sell candle like this that engulf it, normally what will happen is there's going to be a break of structure below this. But there's always going to be a break of structure. The moment you have an engulfing candlestick, if you go to the line chart, there's automatically a break of structure within there. Automatically, anywhere, quote me anywhere. If there is an engulfing candlestick, same thing for the buy. If you have a small bullish candlestick, and then you now have a small bearish candlestick, and you now have a big bullish candlestick, quote me anywhere. Automatically in this, there is a break of structure. So automatically here it is. Oh my god, what did I press now? Okay. Automatically here there's a break of structure. Automatically. So since there is a break of structure automatically here to the downside there's a break of structure. What am I doing, man? Automatically to the downside there's a break of structure, and this one automatically to the upside there's a break of structure because there's an engulfing candlestick. Now, engulfing candlestick doesn't always occur this way. Why? Because if you have a structure, pay attention to what I'm going to tell. If you have a structure like this place there's a break of structure. This place there's a break of structure. Why did I say there's always going to be a break of structure here? If it's an open close that God, you guys don't really know all these things, but anyway, let me see. So this zone here that the market just breaks above this high, there's going to be a break of structure here. Now, the next thing that is likely going to happen is the market can likely give us another candlestick right here. Oh, what did I draw? The market can give us another candlestick right here, right? Now, if the market gives us another candlestick right here, it can happen anyhow. It can close above, it can come back, pull back, and close below. Anything that happens. Now, this all I want you to know is this zone there is a break of structure, and this low is a key level, and this place that the break of structure occurred is a key level. That's the only thing I want you to know. Look, this zone is a key level. This zone that got key level. That's just what I want you to know for now before I explain. I'm explaining the structure gradually. I just don't want to rush, right? Now, pay attention to this Euro USD. Yeah? I want to go and focus on GBP USD because I saw something delicious, tasty, and interesting yesterday. So let's pay attention to GU yesterday. Now, look at something. Look at what I'm talking about now. Pay attention to this zone. Pay attention very, very well. This ash candle and this black candle. Now I'm teaching you guys to study candle. You don't have to study the overall structure of the market, which I usually do. I just study the candles and boom, that one is enough for me. I normally just study the candles and that one is very enough for me. I don't literally need to go to do this and do that and do. No. Now, look at this black candle and this ash candle. This ash candle has been engulfed by this black candle. Now, I want to tell you guys the most interesting aspect of engulfing candlesticks. The best thing you need to understand in engulfing candlestick is this high. The high of this black candle, the wick of this black candle need to sweep the wick of this ash candle for it to be called a successful engulfing candlestick. Listen attentively. For it to be called a successful engulfing candlestick, this is structure. This black candle, the high of the black candle need to sweep the high of the previous ash candlestick, and also for it to be a good one, not a successful one this time around. This open close the market needs to close below this particular open close, right? This particular open close. Now, like I said, any time there's an engulfing candlestick, there's automatically a break of structure there. And let me show you how. Let me see. I don't. There's always a break of structure. Okay, now see it. This place. Look at it. Just look at not one break of structure, like two break of structures right there. So whenever there's an engulfing candlestick, you should just know. That's why I say go and learn how to use the line chart very well. You shall enjoy your life, right? So there are two break of structures, two beautiful break of structures right there. Now, right on this engulfing candlestick, now move this high, and the break below this low has already given us bam, 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 bam. These two candlestick, the sweep of this higher, this one, the wick that overtake this one, and the close below this open close. That's why I say anytime there's an engulfing candlestick, there's a break of structure, has already given us a sweep and a break. Meaning we already have a sweep right here, and we already have a break of structure right here. I don't know if you guys are with me. Anyways, I'm not here to teach. I was supposed to do a live analysis, but I'm here trying to show you guys one or two because the analysis is likely going to be based on this engulfing candlestick, right? Now, the sweep and the break. Can you see how the market is easy? Just this candlestick, it's giving us a sweep and what? And a break. An engulfing candlestick, right? Now, what is now going to form inducement right here? Now, pay attention to something also in the marketplace. If you now have another candlestick, give me a second. I'm coming. Let me just get something. Okay, I'm back. So now, if you look at this candlestick, it's going to give you a sweep and a break. Now, if you now have a top candle, let me go back to your USD where I started the drawing. Now, if you have this engulfing candle, and then you now have a third candle that came back, that give a little pullback like this, like just close to it, close to this zone, and like give us an angle, like maybe anything like this. This is going to be a bearish candle. If this is a bearish candle, then this place a break of structure has occurred. Then on the week of this candlesticks, on the green candle, this week is going to be longer than this week. Automatically, this week is going to be longer than this week, like this. And this week is going to be serving as what? Structural liquidity. And then you're going to be executing from the key level that is serving as this break of structure, which is going to be in form of a breaker block, or preferably this engulfing zone. Pay attention. This is going to be it. You're going to have a small wick right here. Then you are going to have a bigger wick right here, a longer wick, taking out the other wicks high. Then you're going to have this next candle giving you the pullback, like let's say like this in form of liquidity, which is weak here. The high of this week is going to be serving like as in form of this liquidity here, and then oh my god, and then this key level here, it's now going to be serving as your entry. Now this three candlestick formation has formed everything you want to see. Just this three candlestick has formed. This is the sweep, right? This is the break, and this is your structural liquidity. So this three candlestick has formed sweep, break, structural liquidity, and you enter off of key level. This is what we call engulfing candlestick pattern formation. Like if they enter from engulfing candle, enter from engulfing candle. Now, basically, I use it more for confirmation entry. It's a pattern on its own. It's a structure on its own. It's a way you enter the market on its own. But I use it to way for confirmation entry. Now, I lost so many moves due to, I don't know. But most of the times, there are two key levels whenever you have an engulfing candlestick. There's going to be the key level, which is the support that break and become resistance, or the resistance that break and become support. And if this candle that pulled back did not mitigate in the immediate break, then you're going to enter from here. But if the pullback mitigate this zone, then you're going to enter from the extreme engulfing candlestick. Always know, put it at the back of your mind, that the mitigation of any breaker block, or the mitigation of a support that break and become resistance, or the resistance that break and become support, is always liquidity. The market is going to come back to the extreme zone. People that trade structural liquidity and PO, I will say, If they mitigate a breaker block, the market is going to come back for the extreme order block. That's the same thing, right? Okay. Now, understand the structure. Understand this one. Go and study. But watch something now right here. Let's go to the this Euro USD, right? Okay, let me go to GBP USD. Let's back to GBP USD. Now, pay attention to what happened here. Look at this zone. We have the sweep and the break. Now, when I drop to the 1 hour time frame, I already know that structure has already started what forming. Now, structure has already okay. This is not the one I'm looking for. I'm looking for the one that happened yesterday. Sorry about that. Now, this was the one that happened yesterday. Look at it. We have an engulfing candlestick. Look at the black candle here. And look at the ash candle here. This thing. There's a black candle and there's an ash candle. And this black candle engulfed the previous ash candle, right? Now, automatically we have a sweep, which is above this zone. This is where you have your sweep, just above that. Just the sweep of this high is a sweep, and the close below this open close of this candle. We are not interested in this long wick. All we are interested in is the body. If the body of this candle has engulfed the body of this candle, then we are good, right? We have a break just below this zone. Now, if you want to see the break clearly, you can go to the 2 hour or the 1 hour time frame preferably, and then you'll see exactly how the break happened, and then do whatever you want to do, right? Okay. Now, that's for that. Going back to the 4 hour chart now. This is what I'm explaining. This zone, this place. Now, this next candle that came, look at the next candle that came, is going to be searching, it is going to be serving as your structural liquidity, and you're going to be executing from here. And your stop loss is going to be just like above this high. You don't need to stress yourself. Just like, let's say the high is what's the number of the high? The high is 198. I can put it at like 28, something like that. That's when my stop loss is going to be. The market doesn't even normally come in well into this zone. But anyway, yesterday it happened on GBP USD like this. Just make your stop loss like this, a little bit above the high, and then you can trade down. Something like this is okay. Now, this engulfing candlestick pattern, it's not a pattern, it's also a structure, and it's one that has happened severally, and I've traded severally. Now, it's normally used as a form of confirmation entry. When you say, oh, you don't know how to do confirmation, and the market has come to your 4 hour POI, then you can wait for either a 4 hour, 2 hour, minimum a 1 hour engulfing candlestick to happen. Minimum a 1 hour engulfing candlestick to happen. Now, when the engulfing pattern happens like this, normally look at it when you are on the chart and the engulfing pattern happens like this. Now, before the candle forms, normally sometimes, most times, I don't wait for the liquidity candle. I just execute from this one. I don't care. I just place myself, boom, boom. That's what I'm expecting, right? I don't even normally wait for it to happen. Now, okay, we've taken the lights, no wonder. Now, let's go to like gold. Not gold, Euro and ZD. That's why I saw those two trades, right? Now, look at this trade on Euro and ZD. Look at the same thing here. This is an engulfing candlestick that closed below this open close, giving me a break of structure. I look at the way the next candle create liquidity. The next one came even closer, which is giving us the more accurate liquidity formed. And then look at just the way I saw just the sell from here. I didn't take the trade. I analyzed, but my bias was incomplete, which is not allowing me to like have the sell. How and why my bias was very, very incomplete. If you pay attention to wow, the bias was so incomplete. Like there was nothing for a bias to tell me that okay, I should sell. And I wasn't confident, and that's why I was like, let me just watch this. The market played out and the market kept on going and going, and the market kept on selling, right? This one, it's okay. This is the same thing that happened. There's a complete structure right here. Okay, if you look at Euro AED, I also sent you guys this chart. That's the same thing that happened. Yeah. Okay. When did Euro AED happen? Okay, this was where Euro AED happened. Pay attention. An engulfing candlestick. These two serving as what? Structural liquidity and executed from. And the execution is supposed to come from this zone, and this was the entry. Now this is what we call what an engulfing candlestick entry, which is a complete structure. It's an advanced structure on its own, right? That doesn't mean you're not going to lose trade. That doesn't mean you will see there's no pattern, there's no structure, there's nothing as good that they're going to teach you that you're not going to lose trade. Nothing. They never get that pattern yet. That pattern never show. They wait for her to make sure more will learn. But yeah, that pattern is not here just yet, right? An engulfing candlestick, it's going to present itself in the proper zone. That's what I said, right? It's going to present itself in the proper zone. There are a lot of improper zones that you're going to see so many things. See, there is a place. Let me give you guys a little story. I know the people are definitely here. You know me, I cannot see the people that are joining because I've shared my screen, my chat. The people are definitely going to be here. I'm so busy with school. I'm very, 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 very busy with school. So I don't normally, if I can't see a trade at night, then I can't trade because I go to the clinic and the supervisor too is too harsh, and I come back from school like 7. Sometimes if I come back 5, I came back very early. 7 is the normal time, and I go to school by 7 also. So it's just like I don't have time to look at the charts, even though sometimes I sneak to look at my MT5. Now, the most recent people I thought trading, when I see some of their charts, I feel like they are trying, but they are literally pattern traders, which is one of the worst thing you would do. Trading patterns will kill you. See, when they say there's always a B setup. A B setup is someone that trade patterns. There's always a B setup, but get yourself that A setup. Wait for that A setup. That doesn't mean that A setup is not going to fail. But your rule says, how many of you have rules? Your rule says daily reject daily, 4-hour break, 1 hour or 4 hour or 2 hour entry model. And the entry model says, I'm not going to say my 4 rules here because it's not an official class. Enter with those 4 rules, bro. Now, when I see their charts, I know the storyline of all the pairs. Most pairs they are trading, they don't follow the storyline. They just like, why the heck was someone trying to sell USDJPY yesterday when USDJPY is fucking bullish? I don't know. Was it? I don't know. I didn't see the name, but it popped up on my screen. Like it popped up on my screen. Why? USDJPY is bullish. No matter how much you are using your daily reject daily 4-hour breakout structure to get your storyline, the trend is the most important, because anywhere you're going to see daily reject daily 4-hour break against the trend, it's literally not going to hold. You yourself, look at how strong this trend is. Look at how bullish it is. I will have a weekly storyline, not a daily storyline that's supposed to end at laser this. And no, it's a very long time one. Why would you try to be selling USDJPY? Bro, look for buys, right? Look for buys. Do something. Okay, I'll try to go through 1 or 2 pairs. I don't know if I can find them. Let me go to the 15 minutes chart. This one is supposed to be interesting, but it's not. Let's go back to the daily. AUDJPY. I saw a move. Let's see. I saw it. I analyzed it. Yeah, it's going. Now, I will tell you guys how I traded this thing. The same thing as always. I'm bullish. Now, yesterday when I came to AUDJPY, I was supposed to be confused, but I am not. Why? Because I have this CRT formation coming down. But one thing I always say is my CRT formation need to tap a kilo. And after tapping kilo, I'll see the 4-hour break. After the 4-hour break, I need to follow my 4 rules. And that 4 rules are not clear. So I was like, okay, let me just see what the market is going to do. The market tapped on this key level overlapping inside of an imbalance on the daily chart. I went to the 4-hour chart. It gives me an obvious break. Where was the obvious break? Above this high. Look at it. Market closed above this high, giving me a break to the upside, telling me that, okay, we are bullish. We are very, very bullish. This is the best bullish scenario you're going to have. Why? Because this is a sweep and a break. Even though there is no proper inducement or structural liquidity, anytime the market closes above a sweep and a break, that is what we call a qualified change of character. A qualified market structure shift is when the market closed above a protected high or a protected low. And it's a protected high, and the market closed above the protected high, and that's beautiful. That's interesting. Now, how did I see this? I don't know. I'm becoming so stupid that I'm not executing on all my trades, even though I've seen them. I've even analyzed that I will not execute. That's because it was not intentional. I slept off. That was the reason. And it already started playing out when I woke up to see the other move. Like it did like 1:3, and now I think it should hit our break even already. Yeah, so let it just be. Now, If you pay attention, the market closed above here, and this is a key level overlapping inside of this imbalance. So when I dropped to the 1 hour chart, I now saw that okay, there was already inducement, which is in form of structural liquidity, and then you have the key level here. Now the key level was not overlapping inside of an imbalance, so I just refined the key level. After refining the key level to this open close, where's my stop loss going to be? Just below this fair value gap. The candle that created this fair value gap, that's where my stop loss is supposed to be. And then boom, look, it's not even hard. This thing is not hard. It's not. Go and study, man. Just go and study. You need to get it right. You get it right. It's not hard. It's not hard. I think, what did I analyze again? I analyzed so many things. Please, what did you analyze again? I've forgotten. Anyway, there's also this. Let's see. Yesterday on this 1 hour chart. Yes, this 1 hour chart. This is the 1 hour chart. I saw something on EURUSD yesterday. I think you should just counter something. Now, also know how to refine your key levels. That's one of the things that's going to help you, make you qualified, right? Let's go to NZD/USD and you see how I took the trade on NZD/USD. Let's use FXCM. Now, it's already retracing. Wow, explain. Don't worry. Now, to the 4 hour chart. You guys know my best structure. There are always two types of structure in the market. One, we have the normal algo structure, and secondly, we have the structure that relates to a breakup block. Now, this is a key level overlapping inside of this zone. But now, normally, when I have a zone like this that is not overlapping inside this imbalance, I refine it to what open close, like I just did on AUD/JPY. Now, if I have it and it's not overlapping directly inside that imbalance, I'm not executing aggressively. That means I'm not qualified for an aggressive execution. I need to wait for what? Confirmation. Now, look at the 4 hour chart, please, and please. Pay attention to the 4 hour chart. Look at this liquidity overlapping inside of everything it's intact. On the 4 hour chart, look at the black candle. Look at the massive rejection close below this open close and go up the high of this candle. Then we have a sweep and a break. Automatically, when I have this sweep and a break, I did not stress myself. Yes, I placed my entry directly above this without the formation of that liquidity. That's how I did it. Now, you guys should go to the group. I don't know. Just go to the group. Now, let me try to say screenshots of the before. Let me show you guys. I have the screenshot of the before right here, before the execution. NZD/USD. Okay, sorry, I sent it on the wrong group. NZD/USD. Look at how I was looking for the entry. 5 people have seen it already. Okay, look at how the confirmation entry when the market tagged in. Now, this is how the entry looks like, right? Just the engulfing candlestick. I did not even wait for the market to form liquidity, and I just entered from the extreme. Simple. That's how I entered the market. Now, there's an entry model that I've been using. If you look at another thing I've traded also previously, I always used to have my trades inside my brain in case that's a trade I took previously. If you look at this zone, we have a key level right here. Now, just look at the way this engulfing candlestick presented itself. This is an engulfing candlestick. This black one engulfed the ash one, closing below this open close, closing below the body, telling me that okay, this is a sweep and a break. Now, I did not even wait for the liquidity, which sometimes I don't, because it's a confirmation entry. Now, I just entered from this. So look at the way the market just gave this sniper. I think if I can remember, my stop loss was 7 pips. Yeah, I have the breakdown of this chart. Till today, I have the breakdown video, and I did not even post it. And this is where I sold from, like this engulfing candlestick. So I use engulfing candlestick a lot. It's one of the most interesting pattern to like stick to or to trade, right? It's a form of advanced market structure that presents itself in just 2 to 3 candlesticks, right? Now look at this. There's an engulfing candlestick. Do you believe? There's an engulfing candlestick. Look at the sweep below this low. These 2 candles closing above here, giving us a break of structure, and then your entry is going to come from here. Your stop loss is going 3 pips below here. Engulfing candlestick, and you're going up, you're flying, right? Now look at the way this engulfing candlestick failed. Why? Because I don't know, there's no liquidity, so this one is not going to be like a confirmed one for me to trade. But look at this one. This come in form of confirmation, because if I can remember, there's a breakup block that is just here, so this one is qualified to be tradable, right? When it comes in form of confirmation, I'm most interested. I don't trade it blindly. It needs to come in form of confirmation entry most of the times, right? Okay, let's watch a little bit of GBPUSD. This is how GBPUSD presented itself yesterday. Now let's analyze GBPUSD. Let me start from the weekly charts. Right now, I'm not saying anything here already. This is a daily chart of GBPUSD, and the closest zone to stop giving yourself the potential buys is going to be this open close. This is the closest zone for okay, I don't buy again. It's the closest zone. And if you look at this formation of this candlestick, 1, 2, 3, the market keep trading back into the open close nearest to it for it to continue the sell. Pay attention. Look at this candle. This candle trade backs into this key level and then drops. This next candle drop back into this open close and then drops. This one trade back into this open close and then drops. Now this one hasn't traded back into this open close. It has. My God. This candle has already traded back into this open close and then dropped. So it keeps doing the same thing. So we know that we are clearly bearish until at least the market take out this liquidity and then this tapped on this open close for us to say maybe we can start looking for buys, right? Let's pay attention to the 4-hour chart. Paying attention to the 4-hour chart, this is the nearest zone that we can start looking for, right? Buys, because I said something. If you understand structure crazily, you don't need a bias. I've said it so many times. There's a level of understanding of structure that I don't do bias. Wallahi, I don't fucking care about bias. When there's a certain structure, I will just say, I'll be like, top. I just place limit order, right? Now, this is the zone I will likely pause myself. That doesn't mean the market is not going to continue selling, because if you pay attention to this is a sweep, right? So the market can drop as low as coming to this zone, engineering a heavy liquidity, and then this zone is going to give us the maximum push to this top side, right? GBPUSD. Yeah, it's interesting. Now, paying attention to this is the 4-hour chart, and I'm going to look at the most recent break of structure. The most recent break of structure, if this candle closed below this zone, this is the most recent break of structure. I will show you on the line chart. This place is going to be the most recent break of structure, right? But then this is the major break of structure that you guys would like to see. And this is the 4-hour chart, and also pay attention to something again, and again. This is a key level, and this is a key level, and this candle retraced back into this 2 key level. These are the 2 key levels. This is a key level that got broken and got retested. This white candle trade back into it. I'll go to the 1-hour chart. I'm just giving you guys an intraday breakdown, please. Right now, the market came and the market gave us a break below this zone. I cannot even trade this thing, sir. This thing is too unsure for me. I cannot trade this thing. I will give myself. Let's just wait for this pair, because I'm not even seeing anything. I'm blind. I'm blind to this. Actually, this is the pair I'm in. I've closed some of my position and I'm still holding some of my positions. So please, don't be confused. That's not how the trade is going. Please. This is where we entered from. The market dropped to let's say, oh my God. The market dropped to 1 is to 2.5, 2.6. And then the market is still doing the nonsense around here. So I don't know. I want to give you guys just one brief analysis. Yes. Gold is just a confused pair. So gold is confused. One in confused pairs actually. This is a beautiful zone. Key level overlapping each other and imbalance. Very, very beautiful zone. Let's look at the 1-hour chart to continue. God, this is crazy. What should we do to this gold now? Serious beating. Gold needs serious beating. Actually, I don't know. Let's see. Euro AUD. I saw one move. I've forgotten the name of the pair. Is it USDCHF? Was it USDCHF? Look at that, my move on USDCHF. I've forgotten about it. Anyway, the storyline just started. Well, I've forgotten about it. I just saw it right now. So now, if you pay attention to the move on USDCHF, do you notice why I wanted to take that sell-start zone? It's an engulfing candlestick. You don't see them now. It's an engulfing candlestick with liquidity. This is supposed to be the entry, but the stop loss is going to be extremely big. So what did I do? I went down to the 1-hour chart and refined my engulfing candlestick to the 1-hour key level, overlapping it, and then liquidity, and then I now decided to say, okay, let me play this other key level rather than the one on the 4-hour chart, and the storyline was bearish. But I decided to not place that entry. And you can remember I have the breakdown. I posted the breakdown video of this USD CHF, right? So this one is also looking nice. USD card. Let's see. Trying to just give a breakdown of one pair. I've already broken down AUD JPY. AUD Now let's go back to GBP JPY. GBP JPY. I want to talk about this, the behavior of this pair. If you are a type of person that study the behavior of pairs, me I do. Whenever a pair is behaving one kind, I study the way it behaves and I try to give it the benefit of the doubt because some pairs feel key person. I swear to God, some pairs are our lives. Some pairs are after our lives. They want to see us dead. We're not going to die. So if you understand the behavior of GBP JPY, you won't be doing daily reject daily 4-hour break. I swear to God. If you understand the behavior of GBP JPY, you won't be doing daily reject daily 4-hour break because GBP JPY hardly gives the GBP JPY needs intellectual structure. Just think, get your actual direction, get your fucking trade, execute. Backcam. What did they call them? Chakam, Abi? Yes. Because I've been trading GBP JPY, and if you're waiting for daily reject daily 4-hour break of structure, you go chop. After the SL bar, the market will disgrace you. Yes. Now, this is how I analyze GBP JPY yesterday night, but the market, I don't know, I still did not place. You can see I'm just changing it to show you guys something. This was where the execution is supposed to come from. It is coming from this place. I'll show you. And this is a breaker block, right? This is a breaker block. Now, see something now. Oh my God. I cancelled this limit too. I have a limit here. Wallahi tallahi, I have a limit here. I cancelled. Wallahi tallahi, I have a limit. Nah, lie. And it's coming from there. Now, let's just pay attention to GBP JPY and what happened yesterday. GBP JPY is extremely bullish. We can see the recent break of structure to the upside. But what happened is we have an engulfing candlestick with the market pull back to, and then the market is now dropping, which is giving us a temporary retracement. Now, there's a key level overlapping inside of this imbalance. And yesterday we had a rejection of this zone. Now, I'll drop down to the 4-hour chart and look for the break above the zone. Now, upon dropping to the 4-hour chart, we can see that, okay, the market has already mitigated this zone on the 4-hour. And the nearest zone for the market to come back to is going to be this open close, right? Which the market did come back to. This open close, an open close is a lower time frame breaker block also. Now, the market has already broken above this high. Pay attention. The market has already broken above this high, which is giving us a 4-hour break. Today, now, I would say I'm bullish on GBP already because I have a break above this temporary key level right here. So I'm bullish because the market broke above this zone. So I'll be looking for buys. Now, for me that have been trading GBP JPY intellectually, trying to think, because I don't wait for daily reject daily 4-hour break on GBP JPY. Look at this 1-hour breaker block right here. This is now a breaker block because this is a key level. This who can tell me why is this a breaker block? I'm not calling it a key level. This is a breaker block. This. I will unmute you, raise your hand, and I will unmute you and I will allow you to talk. Why is that a key level? Why is this a breaker block and not a key level? Why is this a key level and not a breaker block? And why is this a breaker block and not a key level? Okay, I'm not going to tell you guys. You guys should just go and do being cheeky. Yeah, that's by the way, Sham. This is a breaker block. So engineered liquidity close to the breaker block, and then boom, the market is now flying. I would execute from here. I don't need to wait for the market to give me daily reject daily 4-hour breakup. No. This is going to be a point of entry, and this is going to be your take profits. Now, this is another point of execution. What the market is doing right now. Why? Because the market is disallowing the formation of a favorable gap. So the market is likely just going to continue the buys from this zone and boom, to this high. Right? Beautiful. Yeah, so that's literally GBP JPY behave based on structure. GBP JPY respects key levels, but it's just like a temporary respect. It's usually try as much as it can to stick to, what do we call it? All right, there's a fair value gap right here. If you can have a confirmation entry in this zone, I think you should look for buys. Me, I don't know how to buy from here. Me, I cannot see anything, but I'm telling you, for those of you that use magical entry methods, look for buys. And yesterday I saw these cells right here. I was in the clinic and there was no network. I think one of my students took it. I mean, 3 to 4 of my students, and this is a very beautiful move. This is a key level that got tested once, twice, overlapping inside an imbalance with obvious liquidity. Right here and right here, these liquidities are enough. Now, where do you place your stop loss? Just a little bit above the fair value gap. I will sing them to an ES tire. A little, just, you see this candle that have this fair value gap. For me, normally, for me, that used to have that stop loss. Stop loss is going to just above the candle that has the fair value gap. But for you, you should calculate, use your brain, and put as big stop loss as you want to put. I'll just put it above this and I'll have the best RR and I'll execute. And this is going to be the take profit. This low is going to be the take profit. And immediately the market comes and hits this daily key level, I should stop looking for sells. That's why a lot of people are going to move trade. Some people will want to trade this key level, overlapping inside this imbalance with this liquidity. Whereas the market already tapped a daily key level. You go chop SL. Whenever the market taps a daily key level, stop everything you're doing. And this is a zone, like I said, you can fight for lies, try to look for a buy. You push the market to the upside. Anyway, that's by the way. That's by the way for you guys, right? That's by the way. So that's why I saw. And on Euro JPY, let's see. I love this Euro JPY. I prefer AUD JPY these days because AUD JPY is giving, oh my goodness, look at the beautiful zone. Look at the breaker block. Those people that trade breaker block, this is your entry right here. Clean. Catch it, right? They do it on the 5 minutes, which I don't support. There's no way I'm going to analyze the market on the 5 minutes. There's no fucking way. All right, let's look at the daily chart. Let's see what the market is doing. Right, beautiful, beautiful, beautiful. Now, why do you think I do my analysis this way? Is me, I trade between daily key level to daily key level. I specifically like daily rather than weekly and the others. Now, these are open close where the market comes into yesterday and rejected, and the market is still rejecting from that zone today. Now, I'll drop down to the 4 hour. Before I drop down to the 4 hour, this is the daily chart still. I'll watch out for this high because the storyline can end at this high, right? I'll now go back to the hour chart and look for a break. Now, do we have a break? Yes. Where was the break? The market, this last candle caused the break, and the break is the break that comes from the zone, right? This is where the break happened. After the break had happened, I'll come to the 1 hour chart and I'll start following my rules. What does the rule say? The break of structure, the first pullback after the break of structure, key level closest to liquidity, and the key level that is unmitigated. At least now I've told you guys the rules. Now I'll come minimum, your last resort is the 30 minutes chart. I don't go as lower than the 30 minutes. And you can see this is a beautiful, beautiful entry. Like I have a break of structure right here, and I have the first pullback after this break of structure. And I'm going to this is now a trade. This is a beautiful trade. Look, you have your liquidity. Now, this is the key level that is closest to this zone. So you can either decide to use this key level that got tested multiple times and enter from here. Put your stop loss just like catching the attack again. Or you can decide to say, okay, let me use this zone. This is going to be the refinement right here. And then if you use this, you're going to be missing entry. Simple. This is what a complete breakdown. This is a complete no hard. Just calm down and wait for this to happen. We have a lot of pairs in the market, and you guys know I trade almost all, and I've seen this thing playing out in all. Let me not even say in almost all. This thing is playing out in fucking all of them. How many have I traded before your eyes? Then like, how many? Can't you just wait patiently? Sorry, I'm not proud, but my concept is a mixture, right? It's a mixture of algo, a mixture of SLP, a strategy they call SLP, a little bit of ICT, and key levels. So when I mix everything together, when I blend everything together, it's giving me what I want. Never go killer. Maybe you, for those people that I'm the one that taught them, they know I don't wait for take profits. If I'm going to show you all my wins, it can be 1:7, 1:2, 1:3, 1:4. Minimum is 1:2.5, but you would never see you're hitting TP. Say them banana. If I'm on the chat, when I move out. So then one of the things that traders do that keep them losing, keep them on the bad side of the market is waiting for minimizing their loss. What I mean by minimizing their loss is the trade kind of risking $50. Why don't I losing? I losing so biyar a jere $50. Ana shida. Ana shida sai ka ce to barka da risking $10. Ana shidan sai ka winning sai ka kama 1:6. Kaga kenan you are making a profit of $60 instead of dollars like $50. Your risk should be constant. Kawai, that's the best advice I'm going to give to you. Your risk should be constant. Your risk should always be constant. Kunjinawa, Tom, thank you. So pay attention to everything you're doing. Try as much as you can to be consistent, to get it the right way. There's an entry also for GBP JPY. See, GBP JPY is structural. I will sing it to your ear. For me, why I still have it here is because I know how to trade SLP crazily. My entry model today is based on SLP, and that's why I use those rules. If you hear my rules, they are not from SLP, they are not from any concept, they are on SLP. So that's why my entry model is SLP. My bias is on key levels. And then that's what I normally blend together. Sometimes my bias is CRT, my entry is SLP. Sometimes my entry is key levels and my bias is CRT. So it depends. That's why if you watch my videos or if you attend my classes, everything is going to blend together. Not the previous classes. The recent classes I did last 2 months, I've already had my classes updated. So, but I don't do classes right now. The only classes I do is one-on-one. I cannot take a complete class. If I decide to do them, it's going to be maximum 5 people. They book their slots, I teach them. But what I want to do now, my plan is to get all my students back. They should come back into their senses first. Let me get them back. Let me have a group for all of them. Even if I can't get all, let me get the most of them, right? Beautiful. So, yeah. GBP JPY. I have a limit order here yesterday. I don't even know why I deleted it. As I do, let's look at it. Here's the JPY. I'm ready to teach you candlestick confirmation, so do the reasonable. I've taught you candlestick confirmation, so you can easily enter the market with candlestick confirmation now. Abby can enter. This is the JPY, right? Let's go to the daily chart. All right. On the daily chart, you have a USD JPY coming from this key level. Tapped on this key level. Give us another word. 2 things has happened here. Now, tell me why we are going to be buying USD JPY today. Now, building our bias, we have this key level that the market came inside and the market rejected massively from this zone, telling us that okay, we can continue the bias off of this zone. Right here, this low has been taken out, right? Meaning we'll be expecting the market to target the external low, or I can use this one, anyone that depends, but let me just use the key level. So I will drop to the 4-hour chart and I'll go for a break. Now, I can't even find a break because the break is supposed to be above this high. The other ones that trade, you can use this high as your break. But I don't do that. And this is going to be your entry. Those people that use the 4-hour chart, SLE, if you know my concept based on SLE, I think there's going to be an entry right there. Yeah, so I can't zoom on the 15 minutes chart, this key level. Yes, this key level and this your liquidity. We enter from here, right? The breakup structure, the first pullback, key level closes, liquidity and key level unmitigated. This is it. Can see the break, right? There's an entry from here. The stop loss is not going to be at this low. I don't think my stop loss is going to reach here. 1, 2, 3. My stop loss is going to be around, let's say here. I can put it at the low though, but I don't think so. It might hit my stop loss because my stop loss is actually calculated. So then the market is pushing. It's a bit in profit actually. So it's also cool. So these are all methods you trade. So you don't need a lot of pairs. Well, you don't need a lot of pairs. You can stick to few ones that are giving you the best move. Few ones that are giving you the best move, right? So let's see the 2-hour charts. Let's go back to the daily chart on US oil. That's what's bullish or bearish. I don't know. Let's see the 4-hour. Yes, oil is bullish or bearish. Yes, oil is consolidating. It's not bullish. It's not bearish. Yes, oil is just nonsense. John. What's all this? Yes, oil is doing nonsense. So let's come. Yes, oil is practically doing nonsense. So anyway, that's by the way. But for those people that trade B plus setup, they'll always they'll engage off of this key level that got tested, and they'll use the advantage of this liquidity. It's a B plus setup because you are using the trend. Like I said, they need to be an aggressive move, and this is going to be your entry, right? Oh, sorry, I entered 3-hour instead of 30 minutes. 80 minutes, yeah. It's looking more clean here. This is a very beautiful move, a very beautiful one. It's a because I have a complete bias, but this one you can risk a percentage on it, right? There's a beautiful one on yes oil. Place your stop loss reasonably. I'm not even going to put a position safe, do it yourself. But if you're the type of person that treats CRT also, when you pay attention to this, you see that there's a CRT formation right here, and you're going to be executing from this key level that the CRT formed. That's normally how they do it. I mean, that's not how you guys do it. That's how they do it now. Or if you're using the 1 hour chart, you now decide to use this one here, and the market has been dancing around the zone. So you now be expecting the market to come beautiful. Look at this, beautiful. This US oil is looking beautiful. God, very, very beautiful. Look at, I love the way I will see just this one candle giving me the breakup structure. Look at it, giving me the breakup structure, and then this one giving me the liquidity. US oil is looking very beautiful. If the market is going to pull back to this one, but it's very hard. US oil doesn't have sense. US oil just do what it wants to do when it wants to do it. US oil does what it wants to do, how it wants to do it, when it wants to do it, and where it wants. US oil is just crazy, a very crazy pair, right? But this is a beautiful one actually, a very beautiful one. I like it. Just following the trend actually. Oh my god, this oil is nice. So you guys can try to watch it very well and try to capitalize on it. So nothing much, not going to be overemphasizing on anything. So if you have a question, if you want to talk, I would think of people have taught how to trade. Me, I don't like mentorship. I hate that thing. That thing stresses the hell out of me. And I don't really like the stress. It's stressing me a lot. It's stressing me. So um one of the things that is killing the people I that are around me or that trades that I see is the trade patterns. And that thing is so surprising. I don't really know what trading pattern. Why would you wait for the market to give you all the moves and then you enter? You're just waiting for the market to give one small pattern. Pattern? The trading patterns and it's not good. It's not good for your health. This guy wants to ask question, mystery man. So I'm waiting for your question. And some of you said it's not trading. It's the
Yeah, I was going to ask you something, but you already said it.
what's the question? Can you increase your voice, please?
Okay, I said I was going to ask you, but you just said what I'm going to ask.
I can't hear. Your voice is low.
There is no network over here where
Okay, there's no network.
can you hear me now?
I can hear you, but it's still low, but I can hear.
Yeah, I said what I was going to ask you. You just said it now.
Oh, okay. So I don't know. I still have like five tweet like what is five? Like 13 people still waiting for me to just say I want to do mentorship for them to join. But lie, I don't know. Even the recent students I have don't literally have all my time. The recent students I have don't have all my time and they know. So how do you expect me to now get some set of people again to now start stressing? I'll just stress them. I like the job stress tire. Because me say if I'm stressed. Me say if I'm stressed. But anyway, this one is a good one. This one is a good one. Let me screenshot it and send for you guys. This one, right? This one is a good one. You can try to. Do you know the problem of US oil is if you hold over the weekend or if you hold within the day, well, you go. The swap they are taking alone will destroy your account. The swap alone will destroy your whole account. Let's make it like this. Let's take this out. I'll just screenshot and send for you guys. Sure. It's a B plus setup. We don't have a storyline, so you know how to do it. I'll send it for you guys. Because right now, USL should push up. If USL is not pushing up top, I'm Sabi. I'm Sabi. SGGPY, GPGPY. You're using to go down. Euro USD is going up. Wow. So look for your zone to execute from. Yeah. So if there's no question, I think that should be all for today. I don't know. That should likely be all for today. If there's a question, I'm listening. Ask your question. But if no question, that's all for today. But if it's a question, ask your question.
Sir, can I ask about your favorite time frames?
Who's talking?
Musa Abdusalam.
Musa Abdus, okay. My favorite time frame.
Yes. The one you always focus on.
Oh my goodness. My favorite. I don't know. I just prefer the higher time frame.
Yes. Like normally you said you don't go below 30 minutes, go?
There's no way. There's no way you see me below 30 minutes. There's no way.
Okay.
Because all those time frames lower, I believe there is more of gambling on those time frames. Not even gambling. A lot of people
Yeah.
trade them and make a lot of money. But Kai, I better go. Let me just be safe.
Yes. Smaller
I
time frame.
yeah,
Or fresh.
before I think one of my best time frames, the best time frame I learned trading with was 25 minutes chart. It was a 45 minutes chart. That was my favorite before. But right now, I don't know. Anyone that is good is okay. I'm okay with it.
But are you starting your analysis from daily time frame to like 1 hour or 45?
Yes. Every
Breakdown analysis.
every day. Every day I start my time. I start from daily charts. Give me 1 minute. Let me come back. I'll answer all your questions.
Okay.
Ya Allah.
Hello, sir. Sir,
He said he's coming back right now.
thank you.
Ya Allah. Yeah, so I'm here. I can hear you now. He's asking his question.
Like Alhaji.
Naji.
Oh, wancan engulfin wannan ɗin. Ban taɓa jin shi ba.
Are you sure?
Abu-
I thought that.
Na?
I think I thought that thing. Akwai da shi.
Ina ga an yi bana nan. Na ce a wani time frame ne ake wannan ɗin shi, 4 hour ne ko daily?
Me, I don't literally talk about time frame. The only thing is I stick to higher time frame. My last resort, Kaga, idan ina analysis normally. Let's say I got my storyline from the daily chart. If I have my storyline on the daily chart and then I have my break on the 4 hour chart, and it's telling me to look for buys or it's telling me to look for sells or it's definitely telling me to do something. Now, what I literally do is my entry is going to be like on the 2 hour or on the 1 hour. Normally 2 hour on the 1 hour chart, sometimes 4 hour chart. Now, idan ya zama dole shine zan je 45 ko 30. Amma bai zama ma dole ba zan ma shiga cikin su. Kwata-kwata ba zan ma shiga cikin su.
Ok, yanzu kama a 2 hour idan candle din ya rufe duka last bullish candle, let's say a ce sell ne. Idan bearish candle ya rufe bullish candle complete da wick dinsa da body din gaba daya. So a daidai algo din zan sa entry na sai in sa stop loss.
A key level in da ya creating da ya forming wannan pattern din.
Okay.
A key level.
Sai in sa above the high zan sa stop loss.
Yeah, kamar kaga wannan shine truth din da nake ciki har yanzu. Let me try to on my camera. Oh, I've already posted the video. Like na riga na dau like night recovery loss dina. I don't want to end the week in red because na riga na taking 2 losses starting now. So the night recovery loss ina ƙara little amount of money akai sai na fita. Sai na holding a account ina guda ɗaya. So yanzu ina cikin account ina guda ɗaya. So ina son holding din shi ko to take profit ko kuma ya dawo ya cire na break even. Da abin da ran sai so kansa yawa ba ni yawa ba. So ina kallon zone din yanzu. So in ka kalli wannan za ga wannan bakin candle din shiga na anan na shiga ka gani anan nan ne shine ainihin entry ina na tura muku a screenshot mana a group za ku ga cewa ana engulfing din nan ban shiga daga nan ba saboda key level da imbalance amma da yasa ban shiga ba saboda ni na fi so wannan key level din ya dinga overlapping cikin imbalance ina to baya overlapping so I have to wait for confirmation so kuma sai na sami engulfing candlestick to ni da na sami engulfing wani lokacin da kan jira liquidity wani lokacin ba ruwana da liquidity kawai entry na nake yi direct ba ruwana da an samu liquidity ba samu liquidity ba kawai zan nemi dama in shiga cikin kasuwa to shine da yanda yasa na shiga cikin wannan kaga engulfing kawai akai sai na shiga daga extreme simple
Okay, shi baya buƙatar liquidity ko wani break ko wani abu. Inda ka duba storyline, kana zuwa ka samu 2 hour ko 4 hour ko 1 hour, ka samu key level. The an yi engulfing kawai za ka sa entering ka sa stop loss.
Yeah, haka nake yi basically. Na yin haka sosai.
Okay,
So any other person, what do you want to know? This is even bad season to trade. I think this month, so it's not even this month, July, a productive week for me. Why would I be taking just 3 trades? After the just 3 trades now, 2 self nice. Person will just cry. Look at this market. Anyway, it is what it is. Look at this setup here. Let me give you guys one show. I'll go set up like this. Show you guys with place. Let me look at the daily chart first. This one is looking nice, but it's not nice. You could chop a selling. Anyway, this is how our good structure looks like. Yeah, this is how our good structure looks like, right? We have the sweep, you have the break, you have the inducements, I have the structural liquidity. Now, when the market just comes to this zone and I have an engulfing pattern on the 4 hour chart, nothing is going to stop me from selling. Nothing. Right? But I don't sell. Well, I will definitely sell, right? That's for that. So I want to end the class because I want to go and sleep. I slept too, but I still need more and more and more sleep. I need more than that. The sleep I need is more than that. I will add ADJPY to my watch list, definitely. I'll just add ADJPY and I'll remove all these other ones that are giving me headache. The other pairs that will just give someone headache. You don't even understand where they are coming from or where they are going to. What's this one? What's this one? What's this one? So I will just be going off. I'll try as much as I can to get top. What did he used to call that thing we used to do during the weekend?
Back testing what?
During the weekend, what would they do? How do you get ready for next week? What do you do, Seth? Don't forget. Swear to God, I'll be bad. I swear to God, I don't die. I don't forget. I swear to God, I don't forget.
Normally, some people have to back during weekend.
Yeah, some people used to back test though. Even me, I did before, but now, please remember me the name of this thing. God, I'm such a disgrace. Is it breakdown? It's not breakdown. That thing you do to prepare for next week.
Top down analysis.
No. Kai. Me, I can't remember. You guys cannot remember. Okay.
Weekly insight.
Yeah, it's more like a weekly insight. It's more like a weekly insight. Oh God, 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 God. I'm such a disgrace though. Such a disgrace.
Weekly breakdown.
Yeah, live and I don't know. Forget Joe. I've forgotten, but it's something I used to call it last night. I've
Okay.
forgotten.
Anyway, Jazakallah khair. Allah saka da
Yeah,
alkhairi.
I'm going to
Thanks for listening.
going
Allah
off.
saka.